India's real estate boom has slowed down for the few years now, be it the pricing on the regulatory changes that the sector has been through, its share of turmoil as well. Only recently have the organized players managed to get a hang over their inventory and streamline construction. But the other big issue that seems to be coming up is the unsold inventory with a lot of organized builders, which in turn is collateralized in some ways with the NBFCs. And what happens if this doesn't get sold out? The question is the sector looking like coming out of pain, or is it on the throes of getting plunged into something worse because of this liquidity mismatch that has crept up over the last few months? Let's put that question across to Anuj Puri, the chairman of Anarock Property Consultants. Anuj, good having you. Thanks much for joining me. We were just speaking to Ashok Tyagi of DLF, but that was more company specific and he was sanguine about the prospects. My question to you is, does it look like there is a bit of a problematic situation with select developers who were financed by select NBFCs, and because the sale is not happening and because there are liquidity issues, those projects might be under problem but might have the capacity to sour the sentiment in the near term for the space at large?
So very good morning to you as well, Neeraj. It's a delight to be on your show. Let me break it into two parts, the question that you have asked. One is on the commercial office assets and the other one is the residential. Because, invariably we forget the good things on the commercial office that's happening. I mean, 2018 was the best year that India saw on the commercial leasing. Nearly 40 million square feet was leased, which is about the same that was delivered. The rentals continue to move up by 1 to 3% every quarter. Clearly, the REITs happened earlier this year, and there is a huge amount of sentiment, positive sentiment, both towards the developers and the private equity who's on the commercial office side. The lease rental income continues to grow, and as soon as an office asset which is fully leased comes on the block, within 24 hours it's lapped up by the private equity. So clearly huge amount of money there and a lot of demand from the corporate occupiers, given how the US economy is performing and they continue to outsource in India. When you look on the other side, on the residential, I think you summarized it beautifully, Neeraj, that there are two parts to the equation. One part is where the developers have got stuck with the NBFCs, and I think you're absolutely right that the pain is there and the pain is getting more momentum, and it is getting deeper and deeper. So clearly that is going to be a problematic situation where NBFCs had committed monies to the developers. They have partially funded the developer as well, and the developer's building is, say, half complete, and the balance half the NBFC is now not funding, as a result of which there is going to be a problem and the project is likely to get stalled. But on the other hand, there are very good developers who are taking benefit of this situation. Most of your listed companies actually, Neeraj, come in that category, because a question that is asked to me is that, Anuj, whilst you are saying there is so much of trouble on the residential, yet you look at the results of all the listed companies, listed developers, they continue to show growth. So actually what's happening is that the flight to quality from the demand perspective, from the buyer perspective is happening, and they're moving to people who have better corporate governance, who are lesser leveraged, who had more equity, who are financially stable, who are continuing to demonstrate construction at the site. As a result of it, their sales are doubling and they are growing. So there is clearly a differentiation between boys and the men now. And some of these boys are getting hampered because the liquidity crunch by the NBFC current situation is causing grief.
Okay, interesting. And thanks so much for putting perspective on that. Anuj, part two of my question therefore would be, in your experience and looking at the real estate space right now, for the residential pocket right now, would you believe that the last 6 months are giving any kind of trends which point towards whether the smaller ticket sized homes by and large are the ones that will sell more? Are larger developers also starting to do that because that's easily saleable, and the demand for the larger ticket homes, the 25 crore plus or the 15 crore plus homes, is shrinking? Are trends of that kind coming forth?
Clearly, Neeraj, it is absolutely abundantly clear across the cities, not only in Mumbai, across the cities, and our analysis showed invariably between 7 to 27% the apartment sizes have gone down across the cities. So clearly, one, the apartment size has gone down. Second is that the ticket price has gone down. Luxury premium has become very difficult to sell. The good thing, however, on that is, Neeraj, that the new stock is just not coming up. I haven't seen a new project in the last 5 years that has been launched in the premium segment. So really, whatever is there in the premium segment is running down on its inventory. So that is the good news, that the large developers, the listed developers are not really looking at that premium luxury, which is what they were doing earlier. They're just running down their inventory. Most of them have really moved into that sort of mid-level affordable segment, and I will classify that, say for Bombay, it's about 2 crore rupees, and for the rest of India, about 75 lakhs to 1 crore rupees and below. That is the segment that majority of the developers are playing. But I'll put a small caveat to that, Neeraj, and what I am discovering is, interestingly, a lot of the affordable housing, which is very tight in space, sells beautifully on the plan. But once they are getting delivered, it is not selling. And the reason is that they're so tight, so compressed, and perhaps to an extent inhabitable, that when the buyer is going into those apartments and seeing it, they're like, I'm not going to be able to live in here, I'm not buying this. On paper, they are unable to understand it. So interestingly, on paper it sells well, but actually when it's getting delivered, and the guy is getting in and putting his 2 arms and stretching around and saying, well, I'm not going to be able to fit in this. They're like, we're not going to buy into this. So I think that evolution, the pendulum has moved to an extreme where they have made it too tight. And I think somewhere it'll need to come back and be a little bit more balanced.
So are you saying, Anuj, that even in large affordable housing segments, select few, I'm guessing, there's an initial spurt of sales, and then the sales have stopped?
You're right, Neeraj. Those projects where they are not well designed, where it was only a matter of a ticket price and the developer did not apply themselves on the design, it did very well because the ticket price was very attractive at the time of the launch. And the consumer and the buyer did not really understand on the plan, how it stacked. But once it's getting delivered, those apartments which were not well conceived are struggling to sell now.
Is that a larger proportion, or is that a very small proportion, Anuj? Any thoughts? Any way to dissect that?
In some of the cities, Neeraj, in some of the cities, particularly you go up in the north, in the NCR, it is a very large proportion. And many of the developers thought it was just a ticket price, and you bring out a very attractive ticket price, irrespective of how the composition of the apartment is, it'll sell. Unfortunately, that hasn't been the truth. And certainly when you get into the Noida, Greater Noida, Ghaziabad, side, that is where we are finding this. Where the application on the design wasn't done by the developers, and you're seeing a larger proportion of the unsold inventory in that affordable housing segment as well.
Okay. Anuj, my final question really would be, do you foresee a possibility of there being a crisis-like situation in select residential pockets because of the point that we started off this conversation with? The lack of liquidity, builder money and the NBFC money being trapped, and sales not happening. Is that a possibility?
So Neeraj, I certainly believe there is a possibility. The way the situation is today, in the last 9 months, there has been very little liquidity that has come in to select developers, and I think the situation is becoming pretty grim with many of those developers. As I said, as Neeraj, if you look at it, the NBFCs, and not all, but some of the NBFCs, had committed, say that I'll give you 100 to the developer. They also gave 40 or 50 to the developer, and the developer has put that money in the project. And the balance 50, 60, the NBFC is saying is, well, I'm not going to be able to give. And the developer is like saying is, well, my project is half complete. What do I do from here onwards? At the start of the project, there was a financial closure that had happened, and suddenly, that financial closure is going away. So where the developer is being able to go to a stronger developer and saying, yes, sir, please do a DM or a JV, JD, they're going to get out. But there are going to be many instances, Neeraj, to your point, where we would not be able to see this cycle turn, and those projects will certainly have a problem. So I have no doubt in admitting that there will be certain sections of the community within the developers, within those stakeholders, within certain markets where we will see this grim situation where the projects were going on well but are now going to get stalled because of lack of liquidity.
But it will not impact the system at large. And one more follow-up to that is there no way for the developer to switch the financier of the project? If the current financier is not able to deliver the remaining money, aren't there stronger financiers available to take up that part?
So very interesting point, Neeraj. At this moment in time, none of the financiers are wanting to bail out any other NBFC. So some of the financiers are happy to do new, not necessarily inherit the old from the others. So that has been the general theme where we've not seen many of the NBFCs who are still writing checks wanting to take from the other NBFCs part of their book unless it's at a discount. So that hasn't happened, and the private equity hasn't come in. And there are no new NBFCs that have come in. So it has become difficult for the developer to be able to switch to a new financer. Is it going to be creating a huge amount of havoc at the system at large? I don't think so. I think what will happen ultimately, Neeraj, is that a lot of the, as I said, it is sort of sifting, and moving men from the boys. So a lot of the developers will go and go by the wayside, and you will see very mature, experienced, financially disciplined, perhaps a much smaller community of developers. We are also seeing, Neeraj, on a positive side, that there are new corporates who are wanting to get into the real estate development. I mean, you look at Birla's, Bharti, the Airtel guys, Hero, Kirloskar, TVS. I mean, these were corporates which were not there in the real estate, and they're now saying is, well, this seems to be an interesting sector, seems to be a very clean, regulated sector, looks like an even playing field for us, looks more like an industrial sector. Let's go ahead and now embark on this journey.
Well, we'll save that conversation for another time, Anuj. It'll be a pleasure to talk about that as well, as to what are our views on that changing landscape. But thank you so much for taking the time out. Belated birthday wishes to you, and I look forward to talking to you soon.
Thank you very much.
All right, the markets just very quickly have moved into the green, so keep that at the back of your mind. About 0.25% in the green after starting off in the red. So maybe that dust around IT might have settled a bit. Banks seem to be doing reasonably okay. It's a wrap on this leg of Indian Open. Up next is the FNO show. Stay tuned to Bloomberg Quint Live.